Alin Ratmaja, you're watching Economic Outlook. We will bring you the latest state of the country's economy as well as weekly recap of domestic and global markets. Let's start the first one from home. And here's our headlines today. Indonesia expects to receive at least 255,000 Chinese tourists this year following the easing of the COVID-19 travel restrictions imposed by the Chinese authorities last year to curb the spread of the virus. Indonesia's goal is to be one of the top 10 largest economies of the world. To reach this goal, the government has to work hard to attract foreign investments to keep the country's economy running and growing. U.S. stocks capped off a winning week fueled by better than expected economic growth and Tesla's strong results. Those are today's headlines, and let's start the first from Indonesia. Indonesia expects to receive at least 255,000 Chinese tourists this year following the recent easing of the COVID-19 travel restrictions imposed by the Chinese authorities last year to curb the spread of the virus. At least 200 Chinese tourists arrived at Igusti Ngurah Rai International Airport in Denpasar, Bali on Sunday. They were among the first groups of the Chinese visiting the resort island following the easing of China's travel restrictions late last year. Speaking in a weekly press briefing in Jakarta, Minister of Tourism and Creative Economy Sandiaga Uno said that his office would promote favorite destinations such as Bali, Manado, and 5 other super priority destinations to attract the Chinese tourists. Minister Sandiaga Uno is also optimistic at least 255,000 Chinese tourists will visit Indonesia this year. The return of the Chinese tourists to Indonesia is expected to make Indonesia be able to achieve the target to receive between 2.5 million to 7.4 million foreign tourists this year. Indonesian government will soon issue regulation to require exporters of natural resources to keep their export earnings at local banks for at least 3 months. Coordinating Minister for the Economic Affairs Airlangga Hartarto said in Jakarta that the requirement to keep export earnings in local banks was needed to protect the Indonesian currency rupiah and to prevent capital outflow amid the rising risk of global recession. The new ruling will replace the previous one, which also requires exporters of natural resources to keep earnings at domestic banks but set no time frame. Meanwhile, Bank Indonesia has recently introduced a new policy for local banks to match interest rates offered by foreign lenders in a move to persuade exporters to keep their foreign exchange earnings at home. The new policy would make it possible for exporters to earn yields from local banks comparable with those offered by foreign lenders. The Indonesian government will set emission quotas for the country's major coal-fired power plants later this month as an initial step in establishing a mechanism for domestic carbon trading. The quota will be set by the latest January 31st. After obtaining the quota, business players are required to carry out carbon trading. The first phase of carbon trade will cover coal power plants with minimum 100 megawatt capacity that is directly connected to power grids owned by state-owned electricity company PLN. Among the world's biggest greenhouse gas emitters, Indonesia last year set a more ambitious target for reducing carbon emission by 31.89% on its own or 43.2% with international support by 2030 that compared to its 2015 Paris Agreement pledge to cut emissions by 29% or 41% with international help. The Indonesian unit of Japanese automotive giant set a new record high in export sales in 2022. Toyota exported 297,000 cars from Indonesia to more than 80 countries last year. Toyota Motor Manufacturing Indonesia said that the company's exports increased by 58% to 297,000 cars in 2022. The figure accounted for 63% of the country's completely built-up vehicle exports of 473,000 cars last year. For more than 3 decades, Toyota Motor Manufacturing Indonesia has sold 2.3 million Toyota cars, including 578,000 units of the SUV model Fortuner, which made up the biggest share of the company's overall export sales. Last year, the company began Toyota Veloz, and it later provided the largest contribution to the total exports. Indonesian Ministry of Public Works and Public Housing (PUPR) has allocated 10.72 trillion rupiah, or about 717 billion US dollars, to build roads and bridges in the new capital city of East Kalimantan. Director General of Highways of the PUPR Ministry, Hedi Rahadian, told a hearing of the House of Representatives that the total funds, about 8.75 trillion rupiah, would be used to finance road construction. Meanwhile, the remainders will be used for development of other infrastructure facilities in a new capital city named IKN Nusantara. He said there are 9 construction activities within the new capital city. They include the preservations of the ITCI 3 Rico Segment 1 road, the preservations of the ITCI 3 Rico Segment 2 road, and the preservation of the Rico 3 intersections of the Balang Island bridges. Earnings from the auction of assets confiscated by the government amounted to 35.23 trillion rupiah, or 2.34 billion US dollars in 2022, becoming the highest in recorded history. Based on data from
the Finance Ministry's Directorate General of State Assets, or DJKN Kemenkeu, the auction proceeds of 35.23 trillion rupiahs in 2022 accounted for 117% of the target of 30 trillion rupiahs. That number increased from previous years. Along with the increase in the value of these auction proceeds, the total non-tax revenue, or PNBP, from the auction of confiscated assets continued to increase. In 2022, the government booked 850 billion rupiahs in non-tax revenue from the sales of confiscated assets, an increase from 726 billion rupiahs in 2021. However, a large number of assets confiscated from major cases, such as Bank Indonesia's Liquidity Support, or BLBI, funds and US Raya Insurance, are difficult to auction off due to various factors, including too high valuation.
Thank you for staying with us. Indonesia's goal is to be one of the top 10 largest economies of the world. And to reach this goal, the government has to work hard to attract foreign investors to Indonesia to keep the country's economy running and growing. It is certainly not an easy job, but it is not impossible if the government has the commitment to make Indonesia a good country to do business.
With a population of about 275 million people, abundant natural wealth, and a strategic location, Indonesia is one of the most attractive countries to do business. The government has made a number of changes in recent years so that investors can easily take the advantages of the investment potentials. At present, if investors want to open a factory in Indonesia, they no longer have to worry about difficulties in obtaining permits. One of the government's innovations is the release of an electronically integrated licensing system, which can process the issuance of the business permit more quickly. In addition to the easing of the licensing procedures, the government has also provided fiscal incentives in the form of tax holiday and tax deduction to companies engaged in priority sectors and those operate in special economic zones. However, a number of regulatory problems and regions still hamper investments in the country. Such regulatory barriers have impeded the government's efforts in attracting foreign direct investment. President Joko Widodo is aware of such weakness. In his address during National Coordinating Meeting of the Regional Leader Coordination Forum, or Forkomindo, in Bogor in the middle of January, President Joko Widodo asked the regional heads to pay more attention to investment. Nowadays, attracting new investment could be more urgent than before, as the country needs more resources to spur the economy and in turn improve the people's welfare. Investment will not only help boost the economy but also provide jobs for the country's growing population. During the gathering, President Joko Widodo warned that Indonesia had to fight to lure investors, as other countries would do anything possible to attract foreign investment to help them rise from adversity during the pandemic. No wonder if the Indonesian delegation, led by Coordinating Maritime Affairs Minister Luhut Panjaitan, made an extra effort to promote the country's investment during the World Economic Forum in Davos, Switzerland recently. During the event, the chairman of the Investment Coordinating Board, Investment Minister Bahlil Lahadalia, highlighted Indonesia's investment opportunities and the fiscal and non-fiscal incentives they will receive if they open factories in Indonesia. Investment Minister Bahlil invited investors to take part in the construction of the country's new capital city in East Kalimantan and in the development of the country's downstream industry in the mineral sector. Indonesia's investment realization is not bad. According to the latest investment data issued by BKPM, the country's foreign direct investment surged 44% on a yearly basis in 2022, with the base metals sector drawing in the biggest inflows. Indonesia received 654 trillion rupiahs worth of foreign direct investment last month will continue to flow into the country.
At least 45 companies are in the pipeline to launch their initial public offering through the Indonesian Stock Exchange. The companies are engaged in a wide range of business activities such as in raw materials and consumer products to technology.
The Director of Corporate Valuation 1 of the Indonesian Stock Exchange, Gede Nyoman Yetna, said recently that the 45 companies would raise about 49.5 trillion rupiahs, or about $330 billion from the IPO. He said that companies in the consumer cyclicals and technology sectors would dominate the public offering.
Kita juga sudah menerapkan aplikasi namanya Electronic IPO atau e-IPO. Jadi kalau dulu kita manual, ya.
Some of the companies that are currently in the pipeline for listing their shares have a target of raising more than 1 trillion rupiahs from their IPOs. Nyoman said 11 companies which will launch their IPOs have already in the exchange's electronic IPO system, namely PT Bank Pembangunan Daerah Sumatera Utara (TBK), PT Pelita Teknologi Global (TBK), PT Wijaya Cahaya Timber (TBK), PT Haloni Jain (TBK), and PT Hilcon (TBK). The companies also include PT Aviana Sinar Abadi (TBK), PT Jasa Berdikari Logistics (TBK), PT Hasana Boga Sejahtera (TBK), PT Solusi Kemasan Digital (TBK), PT Vastland Indonesia (TBK), and PT Pentavalent (TBK).
Pada posisi harga 200.
Yes, moving on to weekly recap of Indonesian stock market. Jakarta Composite Index added 1.17 1.16% in a week that ended on the 27th of January 2023 to close at 6,898. The advance is predicted to continue this week. However, analysts said investors need to anticipate healthy correction due to profit taking before the rally continue. Jakarta Composite Index managed to maintain its rebound momentum as foreign net buy has increased to 1.12 trillion rupiah in all market last week. If we look at JCI price earnings ratio, historically, Jakarta Composite Index is still considered undervalued at its current level. Analysts predict Jakarta Composite Index to be in the range of 6,790 to 6,970. Investors this week expect the Fed to increase fund rate by 25 basis points lower than the previous hikes. Other than that, solid full year 2022 performance from big caps also fueled rebound. Big caps Bank Negara Indonesia or BBNI posted 80.3 trillion rupiah in net profit in 2022. A 68% increase year on year. The record high net profit has surpassed the pre-pandemic level, which was 15.38 trillion rupiah in 2019. Bank Negara Indonesia said that it has improved its asset quality and cost of fund to improve profitability. The biggest market cap company in Indonesia, Bank Central Asia, BBCA, has also released its 2022 earnings report. BBCA's net profit surged 29.6% to 40.7 trillion rupiah in 2022. Credit growth has reached 11.7% year over year to as much as 711.3 trillion rupiah as the economy has started to recover. BBCA, which weighs 11% to JCI, gained 4.5% return last week. Let's check U.S. stocks weekly recap. U.S. stocks capped off a winning week fueled by better than expected economic growth and Tesla's strong results. All the major averages in the U.S. posted a positive week and are on pace for a month of gains. Nasdaq rose 4.32% last week and closed out its fourth week of gains. It's on the pace for its best monthly performance since July, while the S&P 500 and Dow Jones gained 2.47% and 1.81% respectively this week. Earnings season pressed on. Tesla recorded revenue gaining 33% for the week, the best weekly performance since May 2013. We can tell that so far this year, markets have bucked 2022 sell-off trend, and so far this year, the Dow Jones has increased 2.5%, S&P 500 has advanced 6%, while the Nasdaq has surged 11%. The rally was fueled by a better than expected fourth quarter U.S. gross domestic product. Fourth quarter GDP rose at a 2.9% annualized pace, better than expected reading of 2.8%. It helps stoke hopes that the Fed may manage a soft landing. These are some of the last data points before the central bank's widely expected 25 basis point hike. And to discuss more about the U.S. stocks recovery and strong rebound, we are happy to be joined by Thomas G. Hayes, Chairman and Managing Member of the Great Hill. Hi.
Hi, Eileen. Nice to be with you.
Yes, very nice to be with you. Good evening, New Jersey time. Thank you very much for making the time to join our show today.
Yes, great to be here. Thank you.
So the U.S. stock market got off to a good start this year. Do you think that this trend will sustain?
We do think the trend is going to sustain. We've seen it in earnings. And I think when we get to about 29% of companies have reported already. When we get through the following week and we see the rest of major tech report, we've got Amazon, we have Apple, we have Alphabet reporting this week. Once that's done, people are going to forget about 2022. They're going to start to look at 2023 and even 2024 earnings. And 2024 earnings are $250 a share for the S&P 500, which means we're only trading at 16 times next year's earnings. And I think that's a reasonable valuation considering we're coming out of this slowdown and we're starting to reaccelerate. So we're constructive moving forward. The other thing you have to keep in mind is a lot of the bearish analysts are saying that the market will go down further because earnings are going to go down further. And what we find is that historically, over the last 6 cycles, the stock market bottoms 6 to 12 months before earnings bottom. So even if earnings come down a little bit more in Q1 and Q2, that would point to October of last year most likely being the bottom of the stock market for the time being. So we're constructive moving forward.
So we have left the bottom behind, and with the fourth quarter GDP growth that is beyond what the economists estimate. So do you think that we can put aside the recession fears and then it's going to be soft landing for the US?
I do think we could see a soft landing here, Aline. If you look at core PCE, the inflation read dropped down to 4.4% in the most recent read last week. And what that tells us is that the Fed only has to do this last 25 basis point hike, and that's going to take the Fed funds rate above that core PCE inflation rate, which is the Fed's preferred metric. And historically, anytime they've raised the Fed funds rate above core PCE, that's enough to squash inflation. So if you look around the other central banks, Indonesia is now pausing rates. We saw Bank of Canada last week pause rates at around the same level, 425 to 450. Philippines looks like they're going to signal. Malaysia looks like they're going to signal. So as the central banks around the world get to this pause level, and they'll keep rates elevated and keep rates restrictive, but as they pause, you're going to see continued softness in the dollar, which bodes pretty well for emerging markets moving forward.
So with the signs of the easing of Fed fund rate hikes this year, do you think that global funds will return to emerging markets, Tom?
Yeah, there's no question, Aline. I think that's going to be the trade for the next year to 2 years. Even with emerging markets up 28% off their bottom, they're still trading at 2007 levels, despite all the growth in GDP. And what we've seen historically is every time the dollar drops, and the dollar's dropped about 11% in the last 3 months since the fall, the emerging markets rally tremendously. If you go back to 2022, you saw the dollar drop 2021, 2022. Emerging markets rallied 480% from 2002 to 2007. The same thing happened from 2009 to 2011. The dollar dropped, emerging markets rallied 196%. It happened again in 2016 to 18. Dollar dropped, emerging markets rallied 96% in 2 years. And then finally in 2020 to 2021, dollar dropped, emerging markets rallied 97%. So we've just seen the dollar drop. So far, the rally's been 28%. We think it's going to be a lot more and well into triple digits. So I think rising tide's going to lift all boats with China's reopening and with the dollar weakening now that the Fed is nearing the end of its tightening cycle.
Could you elaborate more with the China reopenings? Do you think that the global funds will flock to Chinese market, or there are also attractive opportunities offered by other countries in Asia?
Yeah, we think China is actually the #1 emerging market because they've created $2 trillion of excess savings. So we're going to see some of the revenge spending and the revenge travel like we saw in the United States in late 2020 and 2021. The other thing is their government has been aggressively loosening policy, monetary policy, and fiscal stimulus. They've been doing fiscal stimulus, believe it or not, since last March. It hasn't been felt in the economy because people were locked up with the COVID lockdowns. But now that people have been released and they're going back out, we saw it over the lunar holiday, the amount of travel that's happening, the amount of spending that's happening. And that's been a major initiative of the government. They're going to refocus on consumption as their focus. That's going to help the platform economies. And if you look at the weight of emerging markets indices, China is 40%, and some of those platform companies are the top 1, top 2, top 3 weights in those. So I think that's going to be your #1 place. But a rising tide will certainly lift all boats. Countries like Indonesia will get benefits, countries like Malaysia, Singapore, Taiwan. And you just saw tonight the CSI 300 enter a bull market. It's finally up 20% off the lows. The Hang Seng is up over 50% off the lows since October. So we do believe this trade is just beginning, particularly when you look at companies like Alibaba, which are the heavyweights in the indices. You can still buy Alibaba at near its IPO prices in 2014, despite the fact revenues have grown 800%, earnings and cash flow have grown 500%, and we think there's a tremendous opportunity moving forward with their Ali Cloud services moving forward. That's going to be a monster business. Cloud services are expected to triple by 2025 in the country. And with Alibaba having about 38% share, they're going to be the major beneficiary of that.
Very interesting. We have talked about Alibaba, one of the stock. We've seen that so many negative sentiments have put Alibaba prices so low last year, and now we have seen the rebound since November 2022. Let's talk more about Indonesia market, if you don't mind. If we compare Indonesia market to other emerging markets, where is Indonesia positioned? If you see at the real yield, our central bank has said that, indicates that it will no longer increase the rate, the BI 7-day reverse repo rate. So do you think that Indonesia will be still attractive for portfolio investment?
Yeah, no question. Indonesia has favorable demographics. I think the central bank made a wise move by pausing at this level. Inflation is expected to come down to the mid-3s. So that will be very constructive for growth moving forward. And I think that was certainly the right decision. We're hopeful that Chair Powell in the United States will follow suit and also make the equivalent wise decision to one final raise of 25 basis points and then pause moving forward. And then the economy and the global economy can get back to growth, along with China has set their GDP for 5% this year. Many analysts now think that might be too low, and that rising tide is going to lift all boats. So we're very constructive, mostly on emerging markets. China, Indonesia will certainly benefit from that as well. And I think that was certainly the right decision by your central banker.
So Tom, Indonesian government will continue to issue debt papers to raise funds to finance the state budget. Do you think the downward trend in global interest rates will make Indonesian government's bond even more attractive to foreign investors at its current level?
Yeah, you look at your 10-year yield is at 6.8%. That is very constructive. And your government has been fiscally responsible with a debt to GDP at only 41% versus in the United States, our debt to GDP is 120%. So we're limited on how much more we can raise. Even if the Fed wanted to raise more, they couldn't. Whereas in Indonesia, I think that a lot of investors will look at, number one, the higher yield, which is constructive. But number two, the balance sheet looks very, very healthy. And that's a good thing investors want to see.
So last question before we close our dialogue today, I would like to know your opinion. So inflation has eased, and then the Fed fund rate hike cycle seems close to an end. And then, but we haven't seen so far the signs of the ending of the Ukraine and Russian war. Do you think that this conflict will continue to undermine the recovery of the global markets?
It doesn't seem that way because Russia has continued to produce their oil and sell it to China and sell it to India. The sanctions have been tough, but they haven't been as tough as they could have been. So that oil production is still flowing into the global economy. The U.S. has stepped up as a natural gas supplier to Europe. So on balance, I think even if it persists, it won't be that detrimental to the global economy. But I would be open to a positive surprise this year, Aline, because no one's looking for it. And that might be the white swan that no one's paying attention to. Potentially, we could see that wind down sooner than people expect, and that would be a turbo boost for the global economy at a time when it's much needed.
Thank you very much for your insights, Thomas J. Hayes, Chairman and Managing Member of Great Hill Capital, live from New Jersey.
Thank you, Aline.
And that interview wraps up our edition of Economic Outlook. I'm Aline Wiratmaja. Until next time.